For more analysis, we're joined now by Scott Kennedy. He's Deputy Director of the Freeman Chair in China Studies at the Center for Strategic and International Studies. He's a broad knowledge of China's economic policy and its global economic relations. He's also going to China next week, so not necessarily disappointed in this news. I guess there's going to be some value for you, I would say.
Make my trip a little cheaper.
Why now, do you think, and why this move?
I think there's two birds with one stone they're trying to get here. The first is exports are off. The economy isn't growing as fast as they wanted to. Those July numbers were really poor. And so to one extent, this is partly an part of the economic stimulus. Related to that, there's been some amount of capital outflow from China, and by depreciating, they will make RMB assets and the renminbi itself more attractive, and that might stem that. But the longer term and bigger goal is about marketizing how the renminbi is set each day, which is important for internationalization of the renminbi and for the goal that they have this year of getting the RMB included in the IMF's SDR basket.
Reading about this online, there obviously is a jolt to the international markets. There's been a lot of speculation about what this does for oil, and also talking about winners and losers. Obviously, this is going to help China, but Brazil seemed to be a loser. Do you see that as well? I mean, when you look at the landscape out there, the global landscape, who are the winners and losers here?
Well, you know, this is a modest adjustment right now. We're going to have to wait and see if this is followed by further depreciation of the renminbi. If markets move it in that way, then obviously it's going to provide some amount of stimulus to Chinese exports and be a problem for those that compete directly against the Chinese, including some perhaps in the United States. But if it doesn't do that, and this generates real limited volatility in both directions, then really the winner is economic reform in China and the ability of integrating China into the global economy in a much more responsible way.
The Yuan, the devaluation of the Yuan always seems to be a major sticking point with the U.S., and you brought up U.S. companies. We know that President Xi from China is going to be here in the United States for a state visit next month. How is this likely to complicate this kind of complicated relationship between the United States and China already? Again,
I think it all depends on which way the renminbi goes and whether or not the central bank intervenes because of that. If the movements are relatively modest and it doesn't lead to dramatic shifts in trade flows, or if it does and the central bank is willing to resist intervention in markets and keeps to its word that they've promised, then I think that's directly consistent with what Treasury Secretary Liu and what others have been calling on the Chinese to do. So it's really going to depend on how it's implemented over the next few weeks. So when President Xi visits Washington, he's either going to get a handshake and a thank you, or they're going to be quite critical that this is really short-term stimulus.
You've used a couple of words here at different times: dramatic, modest. Is this going to have dramatic impact? You know, we keep saying it's modest. It's not a huge number. Where do you see the impact from this?
Yeah, the big, if they do the reforms as announced, then it's actually should be relatively limited. We're seeing some short-term movements in China with the exchange rate, and you know, the Dow Jones Industrial Average and American markets have reacted somewhat negatively. But over time, this should be relatively absorbed without too much adjustment. The bigger danger where you could see more dramatic change is if they don't follow through and there is intervention again in a way that they didn't say they would. Then you would see a loss of confidence in the Chinese management of the economy in the same way that folks were worried about how the Chinese government decided to intervene in a very hard-fisted manner with regard to the stock market.
Let me ask you about the economy in China, because it's still the envy of the world. Many countries would love to have this type of growth. It's not the type of runaway growth that we've seen in China. As you look at the economy, do you still see it kind of just inching along, or where do you see things?
I think for this year, we shouldn't expect the economy to pick up big speed regardless of what the renminbi does, even if it depreciates significantly as a result of this move. But they are gradually dealing with some of the excess capacity and with some of the built up inventory in real estate, particularly in first-tier cities. And so I would say going into 2016, we might see a gradual improvement. But this is an economy that's still dealing with real estate bubble, still trying to absorb that, still dealing with significant amounts of debt, and trying to push forward economic reforms. And so maybe when the 13th five-year plan is announced next March, if that has a lot of new exciting stuff in it for folks to get behind, maybe that'll provide more enthusiasm for markets and we'll see growth resume its upward trend.
But Scott, you're on that flight to Beijing. I've been on it before. There'll be a lot of smiles, I guess, for the people who are traveling over there with this change in the devaluation.
It'll help things at least a little bit.
Yeah, a little bit. All right, Scott, thanks so much for coming in and visiting with us. Appreciate it.